Hello, it is Saturday. It is the 14th of July, 2012. Let's take a look at silver as well as a banking stock and that of CitiGroup. Interesting chart analysis there. So let's get started. The daily chart contains 100 periods. Each one of these ticks or one of these charts contain 100 periods. So on a daily chart, this is 100 days. It's also getting close to the point where this high is going to have to say goodbye within this chart, as this week next time we will have the top of the chart start with this one in here, because it will increase greater than 100 days since the top, which is a long time in itself. Usually within these intermediate term markets it could be 40, 50 kind of days, but now it's been 100. How much longer? Tough to say. Obviously there's a lot of things that need to be done to reverse this trend over, one of which is breaking this trend line. And of course, as I've been mentioning, within this 18-period average of highs, lows, and closes, to get and stay above that level, when you break above it at any type of these levels, that means it's important to either A, continuously continue on with further gains to the upside, or find the support and lift higher. Well, none of them had continuous gains to the upside. This one had the support, but it didn't lift higher. This one obviously didn't lift higher. It found support, but quite frankly, it went a little bit too deeper, thus making the 18 average in a declining downtrend. On Thursday, or the second last period, an interesting candle, because you have a higher high than the previous one, you had a higher low than the previous one, and you had a correction intraday. And then Friday's session just basically didn't sell it off, but again, it's got a long ways to go. It's got to get above really two highs, the previous high of about 28.5, which is only somewhat important, and the big one in at about 30. Let's move this on to the weekly chart. And on the weekly chart, what's interesting is the descending triangle, this triangle which connects the highs of the market as well as this support level here, which is the Fibonacci retracement, 61.8% retracement from the 1774 breakout lows, which is right in here on the bottom left, and then the $49.81 high from this point in here. And the markings have worked out very well, which meant that, okay, here was a buying opportunity, which pretty much was in this case here. This was a 61.8% retracement from here to here. And then the more times you test support, the more likely it is that you take it out. Obviously, it took it out on that move there. And then the level of support twice hit became resistance twice hit. And so you've hit this level here, you've hit this level. So it's now neutral in a sideways consolidation period. And of course, you got to break the trend line. But until it really has a significant breakdown below, there's no there's no reason to be doing any speculative buying because of chart action alone, until you either have a significant price break below or you have some sort of confirmation break that the sell-off is completed. And the duration of time for this sell-off now is about a year and a half, so it's a decent amount of time. How much longer, of course, it can go, that's anybody's guess, basically. Alrighty, let's move this on now to the monthly chart, because the monthly chart is again showing you the descending triangle, something like that, showing that the clear breakdown below is in at this level here. If, of course, that happens and it goes there, I'll be saying that I expect there's a great chance that this would be that of the bottom. I'll still be giving key future support levels if it breaks down further below that, but it would be unlikely that you'd have further downside if, of course, it comes down towards this level. But it is the banking system that a lot of times can often state how things are going to move. And speaking of banks, it was Friday and I was watching a little bit of CNBC, not much, but they talked about a chart analysis on CitiGroup. And for those people who have done their due diligence, watched CNBC, then they want to get my point of view, well, here you go. This is what CitiGroup looks like. So let's start off within the weekly chart. Basically, what they are saying is that there's some sort of triple bottom formation, because you got this bottom, you got this bottom, and you got this bottom, which I just shake my head when somebody states that that's a bullish sign. Now, as far as Fibonacci retracement is concerned, if you really wanted to give good advice, what you could have said is if it gets to this line, like say back here, that is, when it gets to this line, you short the FUCK out of this type of deal and take the profits, which of course was said and done. It's over, and then that's that. Overall, it's a choppy stock. There was no support found here, which pretty much would have been the area you would have sold the short at. And it hasn't even found resistance at this level yet. I don't see anything bullish about it. But let's take a look at this on multiple time frames. Let's take a look at CitiGroup now on the 2-week chart. Okay. It had a big crash. It had a huge crash. And I'm not even showing the top part of this, actually. Well, that'll be the next chart. But this is 2008. The huge, scary crash down to, like... Well, let's just go... Yeah, it was... Well, for now, we'll say $9.70. We'll change that when we talk about the 3-week chart. And then you make this high. So that's what the Fibonacci is now going to be calculating. The Fibonacci within the retracement of this move. So the key area is 2812. It's below that now. So the school of thought would be when you first reach 2812, then that's an area that you may want to consider for that of a long situation. Two things have happened. Number one, you probably got stopped out. And number two, well, that sell gain was much lower than where you'd expected it. The more often that you test a significant support area, the more likely it is that you take it out. So we tested this, made a lower high at an area where there was a little bit of support, and now back to that level. Okay, you know what? It's possible maybe you make another lower high up to about 31, 32, but quite frankly, I'm going to be now looking for a test of, just by looking at this chart alone, I'm looking for a price objective down to about 1873. 3-week chart. So the 3-week chart will show the down move just a little bit better. The high was 570. But no, it wasn't 570. CitiGroup has never, ever been over $100 a share. Yet we're seeing a high of 570. Well, this low of $9.70, when it was breached, was actually 97 cents. Therefore, it's pretty much a $2.66 stock today because they did a 1 in 10 reverse split. So since the major decline, as far as Fibonacci analysis is concerned, if it can stay and hold below this level, well, that's bearish. So it stayed bearish. If it can stay within this line, that would be neutral. That hasn't occurred yet. And if it can break above 120 and stay above it, then that selling would be that of a failed move. That's not even considerable at this stage. So let's move this on now and take a look at this on a 13-week basis. That's crazy, 13 weeks, but hey, this will take us back to even the 1980s. So we are now levels last seen as future resistance in the late 1980s. It also meant that when the markets did crash in 2008, that it didn't find support anywhere in here and left higher. No. And yet, you're going to hear CNBC talk about it. But you know what? It's always best when you do these types of things to refer, if you're unsure about something, to talk to a financial advisor. And I really can't give any recommendations of things to say, but if I was there and I wanted to talk to a financial advisor, some of the stuff that I'd be asking is if he was familiar with how banks create the currency. How does the fiat dollars come into existence? And is it true that debt is 100% guaranteed because only central bankers can mine the fiat currency? Yeah, use the word mine, because if somebody like us mines fiat currency, they consider that to be a criminal entity, And that, of course, means that you can have severe time in prison, and they will kidnap you. They will most certainly kidnap you if, of course, they catch you. Keyword. But they can create it as much as they want. But the whole basis of the idea is that when these banks lend out the Federal Reserve legal tenders to you, then quite frankly, it's as simple as anything for them to create it. You'll work your butt off to earn enough so that you can repay the loan as well as the interest. And ask the financial advisor that it was a Zeitgeist series that says because interest cannot never be paid back because of its just the basis of how it's created. I'd be interested in what a financial advisor has to say about that, but my guess is that they do not know how currency is created, and they would think you're crazy if you talk anything like I just stated. Thank you for tuning in.